Hello, this is Todd Foster, and this is your market wrap for the week ended January 3rd, 2025. I want to wish all of you a Happy New Year. So let's get into it a little bit today. Markets, did we see a bottom already in the markets, and are we going to see that new high, or do we have another leg down? We're going to discuss that and see some charts. Santa rally looks like it's going to be a fail. I think we need like another, I don't know, 40, 50 basis points into the close. I'll have the stats at the end of next week. Typically, this is a bullish period. So far, it's been negative. I think it's from Christmas until 2 trading days in January. I think I wrote it in the written report. Anyway, usually if we have a negative Santa rally situation, it does mean that we're in a bear market, or there'll be another opportunity to buy stocks lower sometime during the year. So that would be a nice thing to see next week. Bonds are still hovering at the lows. Inflation numbers come out again next week. It does look like inflation's ticking up a bit, so we'll see if there's any reaction next week and what that does for the Fed. Right now, the Fed is expected to cut 2 more times. They lowered that from 4. If the inflation does turn up, that could change dramatically in the months ahead. Commodities, oil is again up another 6%, I think, this week. So oil looks like it's getting ready to break out of that triangle. Remember, when we see $100 a barrel oil, that is the target of this pattern, typically precedes a recession. Metals are still acting a little, sloshing around. Maybe it's because the US dollar keeps moving up and up and up and up. Even on a long-term basis, it looks like it wants to go up a lot. Usually that has to do with interest rates or some kind of bad situation with the market if the dollar keeps moving up. So we'll look at that. And then Bitcoin is going to follow the S&P. So if the S&P bottoms, going to go to new highs here, Bitcoin's going to do the same thing. If we're going to turn back down and have another leg down, then Bitcoin's going to do the same thing. So let's get into the charts, and we'll go from there. Let's see here. So here's just zooming out again. I wanted to kind of show the big picture. So the big picture here from the O2 lows, this pattern almost looks complete. The question becomes, did we bottom already? Or even if I kind of laid out the scenarios in the report. I really like us coming down to this green 4 and then having one more rally, okay? After looking at everything, I think that's our preferred path, and I'll explain our strategy, what we're going to do depending on how things work. The other situation is that we topped here, and this would be the bear market target. This is about a 30% drop, 25 to 30% drop, and here we have the rising 200, 250 week. We have the 61% retracement here at 4,600 or 4,500 right here of this entire move. But we got to take it in kind of baby steps. All right. So in the near term, we're going to zoom into this right here on a daily chart, and we're going to look at what we're going to, do, our strategy from here. Okay. So as you know, we have a lot of cash in the accounts right now because quite frankly, I don't like this weekly. This weekly MACD looks terrible. The pattern could be complete here. But anyway, let's see where we are. So this is what we've done since November. We're basically back to the election, okay? Yesterday, we were back, or 2 days ago, New Year's, we were right back to the election. There's the election right there. So stocks really haven't done anything, okay? But we're in this, this head and shoulders pattern, and but we're in a bull market. So how we're going to handle this here is either A, the bear market has started, and we're going to see this go up a little more and start tanking, okay? It would need to break below this zone right in here, this rising 250 day. You see this coming into this zone? It would have to smash through that, and it would confirm the bear market, okay? That's one scenario. The other scenario is that after a little bit higher, we come back down here, and we start a big rally. That would be this. Okay, and then the target would be 6,700. If that was to occur, if we get down into here and we find support and we start turning up and get a buy signal, we're going to put our cash back to work because of this situation. Again, we're in the later innings of a bull market, but could it go more? Absolutely. It could definitely go more. So we want to be kind of aware that if we hit the 200 day, which we haven't done in 13 months. Typically, we hit the 200-day once a year, and we have not done that for now. I think we're going on to 14 months. So I really like that we come up here and come down here. This would get the bears excited. The bulls would say, oh no, what's going on? And then we have one more big rally. And it syncs up with Bitcoin too, so I really like this one a lot. I think I stated that in the report. So if we do come up just a little more early next week, we start breaking down, we're going to watch what we do here, okay? If we find support and start coming off that support, we'll look to put that cash to work. Otherwise, if we cream through this area, then we'll know we're in a bear market and we already have a lot of cash, so that will be great. Now, the last scenario is that we bottomed right here on New Year's Eve, I guess it was. New Year's Eve, yeah, New Year's Eve. We bottomed and we're going straight to new highs, okay? And we were very oversold. We're getting some sentiment readings that could support that and so forth. If that were to occur, then I'm convinced the bear market's going to start from up here, okay? And we're going to take out all the remaining equity we have, and we're going to, get into the money markets and the safe stuff again. So again, just to summarize, a direct move higher here, has to break out here, but a direct move higher. Our target's 63.50, where we'll do almost all our selling at that point and get into our bear portfolio. However, if we turn back down, it does either two things. One, sets up a buying opportunity for one more rally, or it's the beginning of the bear market or the first leg down in the bear market, okay? Now, again, when I say that we have one more rally, does this mean I'm bullish? No, I'm not. There's too many bad things setting up. I'll just go through some of them. I hope you guys can see me on this or see this thing on here. I think if I move it over, you'll still be able to see me, I hope. Anyway, this is the price, the S&P price to book ratio. We're higher than the 2000 top. And we know what happened after 2000. And remember, I've been comparing this to possibly to the 2000 bubble. So on a valuation basis, we are very expensive. Buffett has $230 billion in cash on the sidelines. Although he's not a perfect timing tool, he's a value investor, which means he doesn't see anything worth buying. Okay, he just sold more Apple again. Anyway, he has the most cash ever on hand. We're at the most expensive market here, higher than 2000 and even the 01 top before 22 or before COVID right here. So that's one thing to look at. This is another thing that's very, very important. These are all the big manias that we've had through all the years. You can see the years down here. So in 1960, it was these 50 stocks. We have the Mag 7. So we have the Mag 7. This time, they had 50 stocks that just did everything. Then the 70s was gold. Then we had the Nikkei into 80. Then we had the 2000 rally into 1990 with the NASDAQ, and then oil as well. Here is the Magnificent Seven, okay? We know how all of these wound up. They did not wind up good. The Nikkei went on to a bear market that lasted, 30 years. Gold had a massive bear market all the way down to $400 an ounce from up here. We know what happened in 2000 with the tech stocks. We know oil into COVID went to negative or wherever it went to. Here's Mag 7. So could it go higher? Absolutely. But this is a warning. This is what bubbles look like. And you can see clearly what we've been doing in the Mag 7 stocks. Another one, just to show how when we start to get parabolic, okay? So here was the rally. Which one was this? That was the 50s, I guess. Here's the 2000s, or here was the 2000s. Here was into the 08 top. Here was into COVID, or into the 18 top, I guess. Here was into the 22 top. And you can see the arc. You see these curves that they have right here, this poster has? Look at what we're doing here. We're going vertical, okay? Combined with this is, it's just a major warning. And again, we have to be on our toes that the first year of election cycle, we usually have a weak first quarter, which would be perfect for our scenario. Just moving this back for here, okay? That would give us our correction in the first quarter. It'd be about 10%, and then we'd continue to rally into the fall or something like that, and then start to top out sometime in the fall. So the election cycle fits as well. But again, are all the ingredients here? Pretty much. Moving on to the bond market, and that yield curve inversion. This was the last one. We wanted that 2 and 10 year. I think we wanted 6 months. I think September started it. September, October, November, December, January, February. And I think on this one, it's about 3-ish months historically when stocks top after this thing uninverts, when we get the gray bars, okay? So 3 months from December is January, February, March. So again, this February, March. Maybe, going back to our chart here of our scenarios, maybe we're just going to just blow off right here, right into February, March, and then that's it. Lights out, okay? But again, we're going to have to see what we do in the zone. As you can see, there's nothing to do here. We're in no man's land, okay? So we need to see this breakout here or break down here. Until that happens, really nothing for us to do but sit on our hands. So that's that yield curve inversion, which is huge. No recession has started without it, okay? We have had these inversions and not had a recession, but it's very rare. Moving on to TLT. TLT is having a little bit of an up week. Just hovering right down here. You see it really hasn't done anything. 4 years now down in the bond market. Unprecedented. Again, when you have this long of a decline, you usually have to kind of digest those gains. If we get some kind of correction here, we get a 10% correction or worse, okay? The bear market begins. I think the bonds will retain their protective status in the portfolios. Given how long this decline was, we need to retrace. I think we'll see money flow back into the market. Barring, which we have to be worried about, is inflation coming back, okay? The inflation for the last couple months, I think it's going to show that starting to tick back up again. So if the bond market wants to crash through here, this is the ag, this is, I told you, like a basket of all the bonds. If this thing breaks below this 96, we're leaving the bond market, because what it could mean is that bonds are completely breaking out, yields, interest rates are going much higher, and we could be in that kind of 22 situation where stocks and bonds go together. So really, this is our stop area. It's holding here fine. We have this beautiful support here, still holding above, so nothing again to do here. But if we see this ag break down under here, we'll be leaving the bond market, because what it means is probably this is breaking down as well, the long-term bond, and that will not be good for stocks. It won't be good for stocks. Because the bonds have been going down, interest rates have been going up, and because interest rates are going up, the dollar just keeps going up and up and up and up and up. This pattern that we had down here, this cup and handle that broke out, tested, and now it's zooming, is around 30.35. We're at 29.75. So there's still room to go in this US dollar, okay? And you know what? If we had this pull back into here, the 10% down into here, the dollar would probably blow off into like a safety trade. It would blow off into here, and then maybe we could have everything start coming down, because maybe if this was to happen, the Fed would come in and do the cut again in January, do another cut in February, and that could take the glitter off of the dollar, and we could see it rolling over. Moving on to commodities now. Oil. What do we have, an up week? When did we have it? I think it was a few weeks ago. We had this nice up week right there, and now we're having this up week here. We're up almost 6%. The MACD looks like it's getting ready to curl and break out to the upside. This could fit again with with this scenario where we're kind of breaking out directly and everything tops together. Bitcoin, the S&P, and we have the oil also. So the target here is about $100 a barrel in oil. When we see $100 a barrel in oil, it has preceded recessions in the past, because of course gasoline, everything gets more expensive. So this breakout here would be just another clue, along with all these other things I showed you, that it's unsustainable. And when we get up into this target zone right here, that would be a major sell zone, because this would probably mark bear start up here, okay? Moving on to gold, you can see nothing really here. It's still below its 50-day, and it looks like the 50-day is now starting to curl down a little bit. It tried to get going, it couldn't. Tried to get going, it couldn't do it. Still below the 50-day moving average. Again, maybe because of the U.S. dollar. Silver here held the 250-day, I think. Let's put that on here. It's struggling with the 200-day. Yeah, held there. But again, you can see here the 50 days really starting to turn down now, okay? So again, just sloppy action in the metals, again, probably because of the US dollar. And again, a lot will have to do on what happens with the S&P. If we got the S&P to break out, maybe the metals could have one more rally or maybe just come up for a double top. We'll have to see, again, how things play out. We need more trading to figure it out. But again, nothing really been going on much, okay, with the metals. Lastly, on to Bitcoin. Like the S&P, there is the 4. Here is the direct move higher. So that would be that we bottomed right here and we're moving straight up. That would be the same thing with Bitcoin. We bottomed right here and we're moving straight up. Remember, the target has always been 125,000. When I did the exact math, it's 125, 130, and that would line up with just everything blowing off right from here. We start going straight up into February, March, straight up into February, March, oil straight up into February, March, and then we top out. Alternatively, we go a little higher here next week into the 6,000, 59.75, something like this, and we turn down. There's no way Bitcoin's going up if the S&P goes to the 200-day. So here I have a scenario where this was A, B, and we're going to come down here to about 80,000, 82,000. I think I wrote the exact number on the written report. So again, nothing to do at this time. We're kind of in no man's land. You see we're in no man's land here. So we're going to need a little bit more trading. But I've gone through here. Just again, the bigger picture is very risky. Whether we see new highs in the short term or we come down and see new highs later this fall or this summer into the fall, or did we top already? We're really kind of in that later stage innings, and that's why we're playing defense here, just to kind of evaluate which way this market's going to go here. To be wildly bullish here without some more confirmation is probably a little bit silly at this point. So let's see here. The market looks like it's going to close flattish on the week. Again, low volume because we had a day off this week. We do have another day off next week for President Carter. They're going to do observation of him passing away. So our markets will be closed on Thursday and our office will be closed on Thursday. But we should have all the traders back next week. So let's see if we get some more definitive type action and we can maybe figure out which way this is going to go. As we see more trading, I'll be able to eliminate some options. But as of right now, there's absolutely nothing to do at this point. Again, if it's my personal preference and leaning based on everything I see, election cycle, maybe needing a little more sediment. There's some stocks like a Boeing and some of these other kind of stocks that look like they do need to come up more. So again, coming up a little bit here and then coming down here and then finding the support at the 200-day, all these averages in here, and then having that one more rally, that is my preferred path and what I'm looking at right now. So let's see how it goes next week, okay? So again, Happy New Year to everybody. Enjoy your weekend. I think we have a lot of football. We have I think some NFL and some college this weekend. So enjoy that, and we'll speak to you again next Friday. Take care. Bye-bye.